Hi everybody, Alex Deploy here, and in today's lecture we're going to answer the question, why use the 15-minute chart time frame when you could be using the hour time frame or the 4-hour time frame? And the quick answer is that this particular system is a close of bar system. So in other words, the decisions are made on the close of a particular bar. If it were a price level decision making system, in other words, when the price reaches a particular price level, a decision is made, then one would use a slightly different approach. But because this particular EA is a close of bar EA, it is important to use smaller time frames, which will give you less slippage. But let's see if that is proven in reality. So here we go. I've loaded the settings from the previous optimization, which gave us a $1,800 return over a year. And I'm just going to run that one again just to make sure that those results are in fact correct. So let's do that. And I'm just need to make sure that the settings are correct. And it literally takes a second to run that kind of test. And if we look at the results, yes, we have $1,812 generated by that particular test. And I'm going to enter it into a table so that we can follow the progress as we're testing. So we've got the 15-minute result. We're going to do a 1-hour result and a 4-hour result. So let's move on to the 1-hour result. So in order to do that, we can basically run with the same settings, except that we have to adjust the moving average period and the moving average offset for the change in time frame. So if one moves from a 15-minute to a 1-hour time frame, what you have to do is divide the settings by 4. So let's just do that. 600 becomes 150, and 450 divided by 4 becomes 113. Okay, so now the settings are suitable for a 1-hour time frame. I need to just change the period on our tester to 1 hour, and then let's run it and see what results we get. Very quick run, and we get a result of 1690. So there has been some slippage, so I'm going to enter the 1690 amount on our table, and there it is. And we'll move on to the 4-hour test. Now again, the 4-hour test is quite easy. All you have to do is divide the settings by 4 to convert from a 1-hour to a 4-hour chart. So the 150 becomes 37, and the 113 becomes 28. Okay, so let's run that, and again we now have the settings set to the 4-hour time frame, so I'm going to change that to the 4-hour time frame, and we'll run that. And let's look at the report. Now the results have dropped quite dramatically down to $894. I'm going to enter that on the chart. 894. So you can see the slippage with this particular system is quite big because it is a close of candle type of system. When you are using a price level type of system like the no stop hedged system, or any grid type of system, then it is price level based, and in fact the time frame that you use does not matter. But if you're using a specific indicator based system that relies on the close of a candle, you would use this kind of approach. So I hope that has helped you to see why in the case of the magic moving average EA, we are using the 15-minute chart for the best results. Now the next question you could ask is, what about the 5-minute chart? Now the 5-minute chart, although that the principle still applies, is too refined and could give you considerable whipsaws as the price is moving over the moving average. And from experience, I know that that is an excessive refinement. So 15-minute chart is an optimum chart for this kind of trading. Okay, so let's move on to the next lecture.